For usual, everything on this channel is for educational purposes only and is not intended as financial advice. Let's take a little look-see here at Macro Monday. And man, we do not look good on the old BTC. And for the most part, the TA certainly isn't neutral here. What anyone does with that information is up to them. The other problem is we are 1,000 days into a bull rally, and we're just not at a place on trend where you'd want us to be bullish. You can, again, throw anything at me. But the TA here on the cloud is pretty simple. Below the cloud, we're bearish. Above, we're bullish. We are currently below. We even got a bearish Chiku span not shown below the cloud. So at this point, we are fully bearish on price. And the expectation is lower lows. That's just the expectation. When you see a picture like this, this could recover, but that's not the expectation. We got all sorts of MA crosses bearish. We're still holding above the 50-week moving average. I think we're below the 20-week here. Every rally seems to get sold off harder the next day. Not great. Not great. Maybe this is some sort of falling channel, but you've got a broader head and shoulders here. You've got a tiny head and shoulders nested in that. This is the AI cloud. We've been below the AI cloud for a minute now. Noisy, yes. However, what is it today? What was it yesterday? What was it the week before? It wasn't above the cloud. Not a bullish expectation. Here's that head and shoulders. The real sick thing here is that even if this breaks down, you could still argue that it's within the bounds of some sort of megaphone. And this is the problem with chart patterns that have diags on both sides of support and resistance. It's very hard to really say, like, with any definitive affirmation what's going on. But it's possible we flirt with below 107, or sorry, below 100, right? So if I were to randomly wake up and see price at 103, 102, that would not surprise me here. That's how bearish we look until we're back above 115. You can trade it as though it's bullish. You can trade it as though none of this stuff's going to happen. I certainly don't know what's going to happen, but it's certainly not a bullish expectation. If anything, if you look at the Bitcoin miners, those have been bullish. Why? Because of AI, not because of Bitcoin. That's kind of also super ironic. So anybody following that story has done very well this year. And here's ETH. Once again, you've got this case for a potential descending broadening wedge still in effect here. We're in the cloud, not as bearish as BTC, but certainly not a long entry signal. That's not what we're talking about here. And for most alts, it certainly doesn't get any better than what we're looking at on ETH. I mean, this is it. This is really best case scenario, is that this stuff just does nothing, goes sideways, slowly recovers, and market is able to chew through any sellers. On BTC, we've still got people sending hundreds of millions to exchanges seemingly every day. So that's not helping prices or sentiment, regardless of if they're selling or not. My guess is they are, because you don't send coins to an exchange for fun. So I don't really have anything bullish to say here at all until we're back above 115 on BTC and 4,200 on ETH. That could happen tomorrow, but today that is not the case. If you look at the basis on CME, we are making multi-month lows here. This is effectively the premium. You can look at all sorts of different types of premiums within the crypto market. Ouvra, this is just one of them. You go to ETH, also making significant lows. So there's certainly no froth in this market based on premiums. We, of course, still have the government shutdown. This is the whitehouse.gov clock all smushed together for some reason. But that's kind of the only thing that isn't humming right now. Legacy is humming. Liquidity has hummed for a while. And maybe there's some sort of snag here with government being shut down. And maybe when the government comes back for whatever reason, then the pipes start moving again. Maybe it's going to take some sort of Fed intervention with liquidity. I don't know. But the TA, again, is not bullish for BTC. Here's what we've seen during previous government shutdowns. We're getting pretty long in the tooth on the duration side. This was as of October 27th, so it's been a couple more days. And I think we're up to, like the website said there, 34 days on duration. And I think one of the biggest thing that's impacting people outside of SNAP benefits would be travel. Travel has been a mess for a lot of people. And I certainly hope for the good of the country that we figure our stuff out here before the travel season during Thanksgiving, because that is going to be a biblical deluge of madness if we don't get that figured out. And if I was ATC, if I was TSA, I would purposefully just go on strike. Why not? Maybe something will get done maybe something will get figured out if we're still shut down by then. So not a good look overall. And of course, government data here is spotty and or just not coming in, obviously, because the government shut down. The longer this goes, the worse the data gets eventually when we do get up and running. And then it'll be a couple months until everything begins to normalize here again. But a bunch of Fed speak this week. We do have ADP employment on Wednesday, which will probably be very, very closely paid attention to because there is a data drought on employment numbers. And since the Fed meeting last week, these probabilities have shifted from effectively 95% cut to 67% cut after Powell mentioned a comment about the fog. Got to slow down on the fog, he says. Equities didn't like that out of the gate. Crypto certainly didn't like that. Equities still look okay. Things doing fine. They're not thriving, but they're doing fine. We'll take a look at all the indices here in a minute. But none of that stuff is as bearish as crypto. That's for sure. The other issue that's cropping up here is trueflation ticking higher consistently here. Now we can say this is seasonal and we can hand wave it and we can say, oh, it's going to go down again. Okay, like that's possible. But you don't want to be in this position where we are cutting into rising inflation. Not the place you want to be most of the time. Now you got to hope this is transitory. You got to hope this is tariff related, whatever. You got to hope other effects bring this down, but that is not a good look. And if we look at the government's nowcast here from the Fed, it doesn't look as dire in that we're not spiking here from the past couple of months when the government has been shut down. I guess it's only been a month, but based on when the data is released, we're seeing some movement in and around these numbers, but nothing crazy yet. I suspect if we do get a 3 handle on headline CPI, markets aren't going to like that. So definitely not something we want to see on our end. PCE and core PCEs, whatever at this point, but I just think it's the headline CPI. That's going to be the problem. GDP, not a problem. 4%, 4.0 on estimates for Q3. That's not a recession. I don't know who needs to hear that again. We'll keep saying that for the people in the back who might think it's a recession. Certain parts of the market or pocket, certain parts of the economy might be in a recession, but in aggregate, that is not what we're seeing in the data. And it won't be declared as such unless you get back-to-back negative quarters of GDP, bare minimum. Looking at some of those inputs on inflation, fertilizer kind of leveling out, looks okay, but also looks reminiscent of trueflation in that it's on the rise again. We've got gas, which has stayed low. This is a multi-month low this year, multi-year low, actually, for gas here, averaging 303. So gas is getting cheaper and cheaper by the minute as inflation continues to tick along. And used car index is also coming down slowly here. I don't have housing up, but housing has basically come to a crawl. Rents have come way, 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 way down. Those have helped bring the CPI numbers down, the basket down. But this stuff's still pretty elevated. Used cars, insurance, some of these parts of the basket are still very, very, very expensive. On the liquidity front, if we look at the reverse repo, this has gone up. Most of this is end of the month window dressing stuff. You typically see spikes in end of month, end of quarter, and then it goes back down. So we'll see where this ends up, but it's been running on fumes for quite some time, right? Not really any movement here. We're not seeing random money coming into the market from the reverse repo. If we look at the global liquidity index relative to BTC, as many people have pointed out, this has not reconnected in any regard since May, June, July. We certainly can lag and have lagged, but you're going to see more people saying, well, maybe we've just topped. You know, that's the ultimate problem here is, again, 1,000 days from the bottom. More and more people are just saying, okay, this is enough. You know, we look good here. I'm up 700%, 1,700%, whatever people are up that they've been holding these coins from. If they're rich, they want to stay that way, regardless if it's filthy fiat. That's what they're going to do. So that's why you're seeing a lot of this pressure. And if you're a 100 millionaire or a billionaire in fiat terms relative to coins you're holding, probably does make some sense to take a little bit off the table. So I don't blame them at all. But you got to trade the market you have, not the market you want. Looking at the dollar, continues to look good, continues to push higher. Not something you want to see if you are already teetering with significant bearishness on the BTC side. We just don't need more stuff going the opposite direction in not our favor. Because when we had everything going in our favor, that wasn't enough. So if we all of a sudden see pressures on dollar strength and liquidity. You can already see it in the liquidity equation index. It's falling there on the liquidity because dollar is rising. Not something we want to see, and this chart looks phenomenal. It's one of the better looking charts that are out there, and that's a real problem. So we really have to hope that that does not continue to break up. This is the 40 and the 60-40, the ag side of US bonds. Nothing great, nothing terrible, just sort of middle of the road here, but it is above the cloud, bullish TK, cross, bullish cloud, bullish Chiku. It's not on there, the lagging span, but the risk offside of the bucket looks much better than it has in many, many years at this point, based on where it's sitting currently. And we certainly don't want this taking off. Not that it would, considering many other things in equities land are still roofing significantly. Here's junk bonds, HYG. Certainly a growing divergence here in HYG versus S&P. This, not a bullish outlook for HYG. Definitely more neutral, and not something I actively trade, but definitely a decent market signal where people are at in their head for risk, that sort of thing. So it makes sense to me that with BTC struggling, you see riskier parts of the market also pulling back to a greater degree than equities. This is a commodities basket. DBC also looks excellent, right? This is exactly what you'd want anything to look that you're able to trade at any time. Multi-year downtrend coming to an end. And I think what's actually dragging this basket is oil. Gold certainly isn't. Metals certainly aren't. But even still, it found a way to break out of the cloud here. So this looks very, very good as a broad index. Gold, of course, really nothing to do, nothing to say. Probably won't be anything to do here in gold for many, many months. Silver had a key June tap already. Maybe a very low time frame inverted head and shoulders. But much like most of the equities discussions this year, how much more do you want or expect? This is where people get into trouble, where they find this chart and they think, oh, I can just get another 600% rally on this, right? Not my expectation. So maybe you adjust sizing on that a little bit or something, but got to be careful on something like this that's already up a lot and has high volatility in general. This is oil. This looks more bearish than BTC. It's looked bearish for years at this point. Below the weekly cloud, awful. I can't imagine trading this for a living. Doesn't need to go anywhere, but it certainly is going to have a heck of a time trying to go up. So this is good for the inflation basket, obviously, if oil stays low. Drill, baby, drill, as they say. Or the SPY here, what is there to be worried about, right? You could say, oh, well, this pattern, that pattern, inside bar, blah, blah, blah. There's nothing to short on this, in my opinion. Doesn't matter if it's the stone cold top. This looks fine on trend. It's slowed down after speeding up a little bit. Looks great. And if Bitcoin can't find its way when the SPY and the Qs look like this, we're certainly in trouble, because if this does reverse, that's going to take BTC with it, almost certainly. But for the moment, both look fine. Maybe a little overbought, but nothing really to say or do there. Mag 7 also looks okay. Nothing really to say or do there. Breaking out of this, its own broadening wedge formation here. Looks fine. Just pulling up IWM here. This also looks fine. Again, you could argue all sorts of things, but ultimately still trending, has been trending quite well since the June breakout. Definitely not bearish at all. SMH, same deal. All these charts look the same. Most of them have NVIDIA in them. Really just nothing to do. On the equity side, on the broad indices, they all look great. If we look at the quantum index, not a place you want to be, in my opinion. All of these, I haven't really seen anybody talk about most of these anymore over the past couple of weeks, but they all look very tired to me, very sickly as they're pulling back. You could argue maybe on Rigetti and Qubits and IONQ that we're at a decent level to try to take a stab, but this is looking more and more like a head and shoulders to me. And again, if the risk side of the market pulls back, these will not be spared. These will continue to move lower. Then lastly, I thought I'd look at Palantir breaking out of its own cup and handle again. I think it's actually down after hours after being up 7%, but still looks fine, right? Again, this is not BTC at all. We can look at things like Rocket Lab or Reddit. All of this stuff looks okay. Maybe not Reddit so much. Reddit actually, last one here. Reddit actually definitely looks like a head and shoulders to me there. So what is there to do in this market right now? Honestly, not much. Probably just sit around and wait, collect some cash, wait for those A+ setups to emerge once again. That's all I got for this one. Give me a like, dislike, comment, share, subscribe. Happy trading.